All right, let's talk about the stock market. When you think about making money with stocks, what's the first thing that comes to mind? For most people, it's all about buying low and selling high, right? Well, what if I told you that's only scratching the surface? Yeah, this is basically investing 101 for a lot of us. You buy a stock, you watch the price like a hawk, and you're praying for that price to shoot up so you can sell and cash in. It's a totally common way to think about it, but it leaves out a massive piece of the wealth building puzzle. Because if you're only focused on the share price, you're missing out on the other and frankly, often more reliable way that your investments can actually pay you. And here it is. This is the other half of the story. Think of it as the silent engine that drives so many successful investment portfolios. We are talking about dividends. And, really getting a handle on this is what takes you from just guessing at the market to being a true long-term owner. So let's break it down. What in the world is a dividend? Well, at its heart, the idea is incredibly simple, but man, is it powerful. It's like this. When a company you own a piece of makes a profit, they have a choice. They can reinvest it all back into the business, or they can share some of that profit directly with their owners, with you. We're not talking about some abstract concept here. We're talking about real cash in your hand. So, to put it simply, it's a slice of the company's profits that gets deposited right into your brokerage account, usually on a pretty regular schedule. It's basically the company's way of saying, hey, thanks for being an owner, here's your cut. Okay, that sounds nice, right? Getting little extra cash. But how does this actually move the needle for you? Why should you get genuinely excited about this? Well, because this completely changes the game. Dividends give you a stream of income that has nothing to do with your day job. They reward you for being patient, not for making a bunch of risky trades. And here's the kicker. Even if a stock's price goes absolutely nowhere for a whole year, those dividend payments can still mean you made money. So let's really put these two ideas head to head. Let's look at how they fit together to build a really solid investment strategy. Okay, on one side, you have what everybody knows and talks about, share price going up. You buy for 100, you sell for 120, you pocket the difference. Simple. But you have to sell your share to get that profit, and you're totally dependent on the market going your way. On the other side, you've got dividend payments. This is income you get just for holding on, no matter what the price does day to day. The truly smart investor knows you don't have to pick one. The goal is to get the best of both worlds. And this really gets to the core of a different investment philosophy. You see, companies that can pay dividends consistently aren't usually chasing hype. They're built on something much more solid, financial health. I mean, think about it. A company can't give away profits it doesn't have. So the very fact that a company pays a dividend is a huge signal. It tells you this is probably a mature, stable business with reliable earnings and a management team that knows how to handle its money. And now we get to the really fun part. This is where dividend investing goes from being just a nice little income stream to an absolutely incredible wealth-building machine. So let's walk through an example. To figure out your return, we look at something called the dividend yield. Let's say you buy one share of a company for $50. And for every share you own, that company pays out an annual dividend of $5. Pretty straightforward so far. So how do we get the yield? You just divide the annual dividend, $5, by the share price, $50. That gives you 0.1 or a 10% dividend yield. What that really means is you're earning a 10% cash return on your money that year just for owning the stock. But here's where the magic really starts. You get that $5 in cash. You could go buy a coffee with it, or you could make the power move. You could reinvest it. This is the cycle that builds fortunes. First, you get your dividend payment. Then you take that cash and you buy more shares of the very same company. Now you own more of the company, right? So what happens next time? Your next dividend payment is even bigger. This creates a self-feeding loop, a wealth snowball that just gets bigger and bigger as it rolls downhill all on its own. So after hearing all that, the big question is this for you? Does this patient, income-first approach actually line up with your own goals and, frankly, your personality? Well, if you're in it for the long haul, we're talking years, even decades. If you love the idea of building up passive income for retirement, and if you're someone who prefers a steadier, lower-risk path, then yeah, this is probably right up your alley. It's built for patient people. Look, this is not a get-rich-quick scheme. It is a get wealthy slowly and steadily strategy. The foundation here is super strong because it's built on the actual real-world earnings of solid companies. And that's really the key thing to remember. Every single year that you hold on and reinvest, you're not just an owner anymore. You're actually growing your ownership stake, and because of that, you're growing your future income, all without putting in a single extra dollar from your pocket. So when you boil it all down, it comes back to this incredibly simple mantra. You find good, solid companies, you hold on to them with patience, and you just let that income flow and grow over time. And really, that's what it's all about. In a world that's always screaming at you to do something, to trade, to react, dividends are this powerful, quiet reminder that sometimes the absolute smartest thing you can do is just own something great and let it do the work for you.